Oh, 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 oh. Get rid of that. All right, now touch nothing. Hello. Oh, wait. All right, are we good? Oh, good. All right, welcome in. Welcome in. Just want to give people some more time to show up. So we'll start in the next minute or two. I do have a slight cold, so you'll hear me clear my throat a few times throughout this. So I apologize ahead of time. But while we're waiting, feel free to add in the chat any, where you're from, what firm you're with, if you have your own firm, participate in another firm. And just, so we can get to know each other a little bit. Nice to meet you, Patrick. Jersey, Dallas, Texas, John. Nice to meet you. Nice to meet you. All right, we get more folks in. Hey, Sheena, I'm in LA too, so it's great. I'm originally from Cleveland, Ohio, and I went to Morehouse College in Georgia, so nice to meet you, Tammy. Oh, Houston. Okay. All right. So we waited enough. We want to make sure we take advantage of everybody's time. So thank you all for for attending this session. This session is a session that's put on by Lili. We'll go more into about Lili, but essentially we're going to be talking about how we get beyond accounting and understanding business credit 101 for accountants and how we can help our clients with business credit. Okay, so next slide. First off, I've been asking y'all to tell me about you all, but my name is Kendale King. I am a CPA, like I mentioned, with Morehouse. I'm currently in Los Angeles. I have a firm called KCK CPA, but we're actually going to be changing that branding soon. But I started out in Big Four with Deloitte, went into consulting with the Siegfried Group, then went back into private, well, went into private with Netflix and ITV Studios um, excuse me, and did some other consulting work with CFGI and Vaco. But right now, again, I have my own firm, KCK CPA, where I mostly provide services, business management, financial services to content creators, entertainers, producers, nonprofits. I know that sounds weird, but essentially anything that anybody in any entity that has a brand, I help them take that brand to the next level and make sure they're utilizing their assets that are mainly intangible, to the fullest extent. I am the president of the Los Angeles chapter for the National Association of Black Accountants, NABA, and I was a previous board member of Cal CPA. Um, also part of AUS EPA, helped FASB create some rules around the rule around digital assets. So I've been around the block and that's about everything. And so I am, here to cover essentially one thing that is really important to me that I like to always push forward for us as accountants is that we need to understand all the opportunities that are around us that are just beyond compliance. Especially in this day and age. You'll hear me say it more and more throughout this whole presentation, but that with the advent of AI, with the increase in automation, there's a lot of things that we do that are definitely very valuable, but can be done for a fraction of the cost, way faster, maybe not as accurate sometimes, but enough for our clients to find reasons not to pay us. And so I personally think this is an opportunity. We should be leveraging it. It's a tool at the end of the day, just like Excel, like the calculator was a tool, Excel was a tool, and AI being a tool as well. But how we then use that to free up our time to be able to do other things. And so this particular series, this session, we're going to talk about how business credit is a mixed opportunity for its clients. And in addition to that, I don't know if you can hear that. But I'm in my garage, sorry. We're also going to where accountants can add more strategic value. We're going to talk about business credit fundamentals. So we're real quick overview, just assuming that you all don't know about business credit. We're just going to breeze through that really quickly. Then we're going to talk about how to help clients build credit without adding more work to your plate. And then obviously tie it all together and how Lili can help you do all of those things. And we'll open up questions and questions for the end. And so at that point, we'll open it up. But right throughout the presentation, I'll just keep on go trudging through. And then if you have any questions, since it's only a few of us, feel free to throw it in the chat. And I'll revisit the chat to answer all those questions if I can. All right, so first off, just wanted to introduce Lili. It is an award-winning business banking platform built to support clients as they go. And so one thing about the business banking, at least in my experience, is that when clients come to me and they think about, they ask like, what's the best business banking, company, that they can go to. For me, it's always just been like, whatever bank that you already have, more so because of the simplicity of, having all of their accounts in one place. Because in my opinion, what I saw was that there wasn't a lot of additional perks and benefits, that a business banking account has at the end of the day. Definitely not from like Wells Fargo or Chase that I've experienced. And so it's really great that, Lili is coming into the space where they're providing specific business banking tools and features that are really, really helpful, that are way beyond what a business bank at a traditional bank would, have. So just here's some stats that you can see, and we'll go back through some of these throughout. And then this particular session is important because one of their strategic partners is Dun Bradstreet, which is an important factor when it comes to business credit. Okay, so the question that people might have is like, well, again, you might have that question because you're on the session, or the people who saw it and was like, I don't want to attend this session, because they probably had the same question: is why does this matter? So our clients don't just need clean books. I know a lot of times we are relegated to just being the bean counter, the record keeper, and the compliance, person. But we also are in the most unique position to help them grow. So specifically when it comes to having the need to access capital to grow, 82% of businesses fail due to cash flow issues. 72% of small business owners do not even know that they have a business credit score. And so it is really important to be able to bridge that education and to be that advisor for your clients and our clients when we are helping them grow. Okay. So on to the next one. Um, Here's how we can expand the value we already provide, right? So we can bring more insight into the financial conversations. We can add business credit to our toolkits. We can help clients unlock better financial opportunities. And we're going to explain a little bit of that throughout the session. And I'll provide some of my own experience and context of how I've utilized these for some of my clients and the benefit it has, because then that starts going into a whole different area of how we can present our value at the end of the day. Because if we just stick to we're doing your books or we're preparing your taxes, we're going to slowly be, more kind of pushed to the side with these new tools. Excuse me. So Here's some common challenges that our clients face. And I'm sure everybody could, see this and be like, yep, yep, yep. So they rely too much on their business credit, oh, sorry, on their personal credit to fund their business. A lot of times when, clients just start up, and they need capital to kind of get things moving, they use their personal credit. Honestly, I had a business myself, coming out of Deloitte, I started a business with my brother, studio. And yeah, in order to get a nice little lump sum of money, I even use my own personal credit to do that. And so, relying on personal credit to fund their business is a huge thing that I see. Limited or no established business credit profile at all because they just don't know how it works. They don't know how to get the trade lines, reported or anything like that. There's also difficulty qualifying for financing or favorable terms, again, with no credit history. And if you're just starting out, you're not going to get the best terms. No visibility into their business credit score or progress. They have no way to monitor it. They have no understanding, how like simple it is to pull up a Credit Karma and look at your personal. They just don't understand it or don't have that visibility, in the day-to-day for their business. And there's, again, further to the monitoring, no structured way to track and build their business credit. And then there's also that inconsistency or unreported payment activity with the vendors that they have. Okay, so what is missing that Lili is stepping in to create is a clear structured way to build and track business credit. So, real quick overview. Again, we said business credit, make that a drinking game by the end of this. But business credit allows clients to borrow money or acquire goods and services with the promise to repay later, right? Makes sense. But the difference between your business credit and your personal credit is your business credit is tied to the EIN or the tax ID of the actual business, so it is separate from your personal. Where that's linked to your social security number, your business credit shows your company's ability to manage and repay debt, which is huge because again, that allows you to get even more capital to grow faster, which we all know that's how you grow a business is, having that access to additional capital. And the most important thing, again, that we want to stress is that it's separate from your personal credit. And it can, again, some people might not have good personal credit, but they can have great business credit if they know how to manage it. Honestly, you probably should be able to manage both, but again, that's where we come in to help them do that. And so that's what we want to just make very clear, personal credit versus business credit. And what is the importance of it? I've said it several times, but here's six things that we identified. It's just that long-term stability and business growth. It can help mitigate risks when they come up by just having the line of credit available to you. It can improve your business valuation, showing that you know how to manage some debt, the money that they are giving to you. And again, you can utilize that to further on other assets and, business ventures that you're doing because you have that capital. Excuse me. Again, building credibility with third parties. Again, you can manage that debt. So investors trying to give you some money or give your client some money, they know that you know how to manage it. It can help you preserve your personal resources. So you're not you got to draw from your own personals all the time, and then gain access to business financing, which again takes you to the next level. Excuse me. Again, just giving the overview, as some people may not already be in the know on, is that business credit is reported by these bureaus. The main one is Dun Bradstreet, and what they report on is your company info, so name, address, time of business, number of employees, et cetera, et cetera. It creates their own credit scores that similarly that like that is the same thing as the personal credit score just for your business. It looks at your payment history, looks if you have any accounts that are in collections, and so again, acts as that same type of credit bureau for your personal, but just for your business. Okay, so again, we wanted to. I know account y'all are like, man, then we already know this stuff. But we want to make sure we go through this process just to make sure we're all on the same page. But usually a good step-by-step guide on how clients can build their business credit is to choose a legal structure and register their business. And if you guys are on social media, I'm sure that you've seen plenty of LLC Twitter and online influencers kind of say, get your LLC, you can go to the bank, get $50,000 and run it up. Um, and so we want to make sure to outline what that actual process looks like. And then we're going to go into something that is really important to me is like understanding when and why and how you're going to use, the business credit is very important. Don't just get it for the sake of getting it. But number one, we choose the legal structure, register your business. Obviously, you set up your business contact information. You get that EIN from the IRS. Apply for the DUNS number as well. This is a step that a lot of people miss when they're doing it. I think the first three is pretty consistent across the board. So if you make sure that you can add on as a service to also get their DUNS number set up, it's just as easy as getting an EIN. So make sure you add that because that's going to be your credit identification number essentially. Then you go and open a bank account. This is when you start the client needs to start considering if they want a secure business credit card. Usually that's a good first start because they're just building it. And so secure business credit card is good. Establishing vendor and supplier trade lines. A lot of people are already utilizing vendors and suppliers, or have net terms with them. So just making sure that they actually report on you is important. And so that you're doing that at a excuse me, at a good you're paying them back on time. Consider a business loan at this point as well. Again, we say consider because we want to get to the next steps to determine if they actually needed it and what they're going to use it for. Make sure you're paying vendors on time or early, and then monitor your credit profile regularly and dispute any inaccuracies. Okay. Okay, moving on. Next one. All right, so here's some common mistakes to avoid when looking at business credit and personal is don't mix your business and credit. Your personal and business credit. Don't miss payments. Don't pay them late. Don't just assume that your credit history that is as reported is correct. Always review it, always check to make sure that there are no errors because it's very possible. And as accountants, we know that that happens. Don't apply for too much too quickly, okay? Because that is another issue that arises. Not monitoring credit reports. So again, going back to don't just assume that everything is right. With anything that we do, you always want to track and make sure that you're on the same page and the information is something that you can use to your advantage. Um, a lot of times when people have business credit, they don't actually establish trade lines. They just get the DUNS number and then just move on, but they never actually provide their DUNS number to their vendor, never actually ask them to report on them or anything like that. Um, Sometimes people don't register their business properly. Sometimes they take on too much debt over time, and then sometimes they overuse the available credit. So all of these mistakes are things that we as accountants can help our clients get ahead of and not fall victim to these because again, this happens quite a bit. And a lot of people are scared to use it. And so we talked about, again, what business credit is, the opportunity that exists here. We're going to get a little bit more into that. And I'm going to give you some case studies that I've had. But now we really want to focus on that, how we can actually help them make better financial decisions. So four things here that we can do is help our clients secure better financing terms, better interest rates, better payback rates, like timelines, due dates. The funding decision should be tied directly to revenue growth and business goals. I've known several clients or who came to me after the fact, and I asked like, what was this loan for? It's like, oh yeah, we just needed some money to kind of to make some things going, or I just got the money because I could, or I bought this asset And then I asked them, are you using it? It's like, ah, no, it was just, we needed it for that one job and, really haven't seen the need for it since. So it's a lot of those that, we can be there to help them think more strategically. Forecast how funding will be used and make sure it happens. So adding on that piece of like, hey, you're going to get $50,000. You're going to need, it has a payback period of 2 years, and here's going to be your payment. How are we again tying it to revenue? And then how are you going to deploy those funds? And how is that going to bring it back to you? Do you have enough money in your cash flow and your budget to make these payments? And then lastly, when to refinance and when not to, because a lot of times the lenders might give you deals or specials like, oh, hey, you can refinance or you can, get another, 50,000 because you've been doing so great. But then it might look good, it might feel good, it might get you at a lower payment rate, or maybe they reduce interest a little bit, but extend your term. But you want to be that advisor to make sure that whatever that change is not going to materially change what your client should be prepared to pay. Because usually, if I'm a sales rep at a lending company, I'm trying to get as much interest from you as possible. So that is my goal. And if you can pay your stuff on time, then I'm going to continue, trying to get you to take more money. Because I want to be able to have more money for the firm. So it's things like that we need to think about ahead of time. And so my case study, essentially, I had a client who created like art and graphics and like pictures. I actually got one, up here. I don't know if you can see it, but it's essentially they go to different conventions around around the world, and they create a booth and they sell these art graphics for people to put in their office space, or their, game room, things like that, right? So for them, before they were a client, I noticed that they had a lot of debt sitting on on their financials, but they also had a lot of assets like laser printers and trucks and things like that, right? And so they were also in the situation like, hey man, we're about to do another run through our conventions, but we don't have enough money to make deposits. They needed to make deposits to the conventions and the events that they were going to in order to secure their spaces. And so they needed that money to lock it in, and they needed the money to create more inventory. They had a very strong, they were very, really good on projecting the revenue and making sure that they were going to hit on that and using previous experience to forecast the revenue goals that they were going to have. And so there's like, we just need X amount of money to be able to do all this so that we can make the money and, go off into the sunset essentially. And so for me, I was, my first thing was like, hey, you already got a lot of debt. You're already paying a lot of stuff. I don't advise more debt. But if you are going to do it, let me negotiate it on your behalf. Let me look and find some people I can talk to. So for me, from my network of lenders that I work with, because again, some of them can be very, very like, bottom feeder-ish, sharkish. And so you have to either know how to play that game, or you have to have a few people that you trust that will always give you the best deal, and just nurture that relationship. So what I did was I had a little bit of both because I can play the game a little bit. And so what I did was, for the sake of this, explanation, let's just say they wanted $100,000. So the first offer that he got, from a company that reached out to him, the interest was insane. It was like 40% interest, and you'd be surprised that is actually pretty average, with a lot of these potential lending companies. It's not like, the Chase banks or anything like that, because again, their balance sheet wasn't strong enough to go into those banks at the time to be able to get access to that type of funding. So the lenders who are trying to get you that fast funding, for 6 months or 12 months type of thing, they're charging, 40% interest on these, and sometimes even higher than that. So that was the initial thing that he got. I decided to take over that conversation, and I decided to have another conversation with a competing lending company and just literally played them against each other. And so we eventually got down to about 12%. But if he paid it back in a certain amount of time, the interest would be free. There would be no interest. But they do stuff like that because they don't think the person will actually pay, or they think, all right, we're able to lock you in as a customer, and then we'll move on. And so being able to set up those deals and do that back and forth is key because as an advisor. You don't have too much skin in the game where it's like, oh man, I need this right now. And they can smell that. They can smell the fear. They can smell the desperation and the need. And so you want to make sure that you always position yourself as that financial advisor. No, that's too much. This is insane. That won't work. And it was a while. I think that took like maybe a week or so, going back and forth with the different companies, and to ultimately get that down. The interest I had saved them in that particular moment, because I negotiated it that way, um, was paid for my services to them for the whole year. And so like that's the stuff that you can use to, position yourself as the value that you're bringing. It's like, hey, because I do your books, I do your taxes, I do your forecasting and your tax planning and X, Y, and Z, and I also help you lock in your debt arrangements. And just in that one service, I was able to save you money that you were going to spend if you didn't have me. And that equals my entire fee for the whole year. Like imagine being able to position and say that to a client, and the value that you can really bring at the end of the day. So, that's one of the situations that you can provide and present yourself as the expert advisor, and help them, make those decisions. Okay. So now, obviously, I think you all can already see the value that that brings to your advisory, but um, the strong business credit helps our clients also improve their cash flow flexibility, meaning that they can pay you on time. They get access to those better financing options. Again, instead of getting these loan sharks at 40%, you can get, something way better at lower percentage. And obviously having assets that you can pledge against that gets you better rates as well. So it's just figuring out what's the best mix that you work with. You can build credibility with those lenders and vendors and reduce reliance on personal credit, which again, at the end of the day, you can start increasing long-term business valuation. So we're already in the perfect position because we understand our clients' behaviors. We manage their books and reporting. We advise on tax and cash flow. We understand what they need the money for. If they actually have habits to pay it back, we have access to their accounts. We are the one person who's probably, one position in their team that actually can help them make these decisions. And if you think about, us at bigger, larger companies, there's whole, positions dedicated to debt financing and managing debt for companies. And so just imagine that at the small business level, and that's a service that you can provide. Now, what if business credit building was built into the client's everyday financial activity? It's not a separate process for you, it's not manual, and it's not dependent on multiple tools. This is the value that Lili is out to provide. Okay, so through the Business Build program that they have in collaboration with Duns and Bradstreet, I would say Duns, with Dun and Bradstreet, they help you monitor and build your credit profile, help you grow with confidence. And obviously, I'm saying you because number one, you can use this for your own business, but you can also use this for your client and help them manage it as well. It allows you to monitor your credit profile. Your client would also get a business build credit card via Lili to help them build up their credit score. 24/7 credit profile access, real-time alerts. You get these 6 key credit scores and ratings. And just by starting off, Lili will also report on, your client for the two trade lines that they are, providing. Number one, that business build credit card, as well as the monthly subscription, if they have a subscription with Lili, as well. So that already starts them off ahead of the game. Excuse me. And there's also credit building trainings similar to this that will also help them learn and grow, and in addition to your guidance. Excuse me. Okay, so beyond credit, Lily also helps you become a more valuable advisor to your clients. Again, at the core of it, it is business banking, but there are a lot of other features that we haven't talked about that Lily can help with the clients, around tax savings. They have a module where your client can automatically put aside money to save up for taxes. And it just kind of takes it out their account automatically, so it's there. We already talked about credit building, but invoicing and payments, bill pay, vendor management. So essentially handling the AP and AR function all in the same system. Obviously giving you the reports and insights, and they do smart bookkeeping in the system. And if your client is only utilizing Lily as their business, banking platform, then this makes your job a lot smoother, a lot easier because it's all in the same system and you can access all your clients in here as well. So they could stay organized and you stay in control. Um, your business banking clients can also count on, again, high-speed volume payments, business credit that's built in, up to 4% annual percentage yield on savings. This 3 million FDIC insurance is really huge because obviously we know that that's a lot lower in most banks. So that's really important. There, it can connect to different business tools as well for the clients, but it also connects to QuickBooks and Zero for us to be able to, get that over into the actual accounting system. And if you're just using business banking, then there is no monthly fees. Obviously, if you start utilizing some of the other features, above the business banking, then some of the subscriptions kick in. So like I mentioned before, clients, by being oh, sorry, actually, let me introduce the accounting program. So being an accounting partner, allows you to, be like to invite clients in. They'll get their first year off. They'll get first 70% off on their first year if they become a Lily Smart, from being recommended by you all. 70% of the business build program will also be discounted, and they'll get priority onboarding support. Our clients will also be able to get our firm, sorry, by participating in the program allows us to be able to get free Lily Premium for life. We'll have a dedicated account manager. We'll have white glove client onboarding, co-marketing opportunities to, get more clients on board, and that accounting portal that has one login across all clients. And obviously the money. There's commission-based things for sure as well, which is up to $350 for every qualified client, as well as a percentage rev share on all their banking subscriptions for up to 18 months. Okay. So there's even more benefits. You will be featured in the Lilly Partner Directory. You could be tapped on for thought leadership, co-branding, webinar, credit education access. You have that revenue tracking dashboard across all of your Lilly clients as well, which again, this is less effort for you and more impact for your clients. So we're going to move into the question and answering portion. But what I really wanted to make sure that we all took away from this is that business credit is a major missed opportunity for small business owners, and that you, as the accountant, are uniquely positioned to guide it. Lily provides the financial foundation to monitor, build, and optimize the profile as well as having a clear way to expand your advisory value in addition to the business, the credit, but also the other ways that Lily helps you become a better partner for your clients. Okay. So, here's what it means. We said this, a few different times, a few different ways, but we really want to hit it home that, this is the opportunity for you to move into strategic, planning for your client. Okay. So here is the link. You can actually use this link to if you have any other questions or if you want to get into the program or anything directly with Lily, but we'll take this time now to answer any questions that are in the Q&A chat. Feel free to, throw it out there. I'll check the other chat too. So far, we got a few questions. All right, so Bridget, excuse me. If business credit is not tied to personal credit, why do lenders ask for our social security number? So this is not to dislike when you are starting off and the lender wants some type of personal guarantee. So essentially, they're like, yeah, you're a new business and yes, your business is separate, but because it's still a little risky for us, we need to build trust together before I can just rely solely on your EIN. Because if your business just started and it crashes, then I don't have any recourse to get anything more. So that's where they add the PG, the personal guarantee, because they want to tie it to your social security number so that they can, potentially get more from you if the business fails. A lot of the lenders that do this are lenders who are, again, they're probably trying to give you a better rate. And it obviously helps you reduce the amount of interest and everything that you're paying them because they have more recourse now to be able to get that money back. So they don't have to charge so much in interest because again, it's just lower risk for them. But that's the main reason why. And then when applying for business credit, do lenders look at our business bank account balance transactions? In some cases, they do ask you for that information. They might ask, hey, can you give us your business bank accounts? Your business bank statement, sorry. And so they're again, like any type of lender, they're going to be looking to see if you are qualified to be able to extend this credit to you. That's why you start with secured credit lines. You start small with different types of loans or credit lines or credit cards to build that up to show that, yes, I can manage this properly. And then obviously the more revenue and profit that you have, the more the lender is likely to provide you with higher credit limits and higher access. Okay. All right, those are the only questions got so far. Let me see. Any other questions? Oh, here's chat. So Lily has someone we can talk to start a program to start a business building from a small company. If so, how do we get in touch with you or another representative? I see the chat on my account. Do I just start chatting on there? Marissa can definitely chime in, but yes, you should be able to scan the QR code and get started with the program. All right, any other questions? Either I did a really, really great job or a really, really bad one. Are business credit builder loans effective? So again, it just depends on how you utilize them, right? Because the whole point of those loans were to, again, build your credit. It just gives you a trade line. It gives you an option to prove to people that you know how to manage manage your debt effectively. So everything helps. Obviously, I would weigh that against how much it actually costs and if you actually need the loan. But everything for sure helps when it comes to proving out that you know how to manage it. Yeah. How do we apply for the Lili business credit? Yeah, you should be able to, again, scan the QR code and that should get you through that process for the Lili business credit. Thank you. Thank you. I mean, we still got time, so if anybody got some questions, feel free. If not, then we can definitely look to end it here. But again, I really think in addition to, let me just give some additional value. In addition to business build credit, I think that us as accountants, let me get on my soapbox real quick. Leaning more into strategic opportunities and strategic ways that we can advise our clients is going to be absolutely necessary to really differentiate ourselves from everybody else and in the past. Okay, so um, just think about what you do well, what industry you're in right now that you serve, what niche you serve, the clients that you serve, and think about, all right, how can I present more services and more advisory to help my client grow? How can I get them to the next level? You turn yourself from a cost center into a profit center. That is, or revenue, at least a revenue generating center, somewhere where they can, when they're looking at what they might have to cut, and they look at you and say, I can't cut you, I can't, you are integral to the company because of the advising and the growth that you are able to, help. And from experience, it is a lot, a lot easier and a lot less time consuming doing the advising than doing just the manual work. Excuse me. Thank you. But what do I do to start? Deposit money. I spend the money from the deposit. Okay, so deposit money. I spend from the money I deposit. So Elsa, are you saying how do you start? Again, if you're interested in you getting more about the Lili Business Build, please click the link or scan the QR code. But yeah, you essentially create an account. You can deposit money into it. You can apply for the programs, and you'll be able to go through that process. I don't know if I hope I answered your question properly. And you asked that question at 10:40. Count and joke. Okay, great. Okay. All right. Well, I appreciate everybody's time. And if nobody has any other questions, we can definitely just shut it down here. I'll stop sharing.